This is Financially Fit Radio with Corey Sickles from Safe Harbor Retirement Group. When a part of your financial strategy is out of tune, your long-term goals, your retirement savings, and your legacy can all suffer. With many years of experience in the financial industry, Corey provides his clients and prospects with the information they need regarding Social Security, retirement income planning, wealth management, and much more. Listen in as we address your financial concerns and provide helpful solutions to put you on the path to achieving your retirement goals. And now, here is Financially Fit Radio with Corey Sickles.
Hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. If you would like more information about what you hear during our show today, just give us a call at 614-760-0670 or visit us online at safeharboroh.com. And while you're on our website, click on that radio page. You can check out past shows and subscribe to our program on Apple Podcast, Amazon Music, Google Podcast, or Spotify. Also, feel free to visit our YouTube page by typing in Safe Harbor Retirement Group to watch videos on different financial topics. And please don't hesitate to reach out to us with questions or if you want to set up a face-to-face or virtual meeting. And remember, all meetings are complimentary with no obligation. Well, today we're going to talk about some of the questions that you really should consider before you invest, not only with an advisor, but just to invest in general. I think these are going to be good questions that we're going to kind of go over, so you have a good sense of what you really should be asking an advisor when you're actually interviewing them. But before we kind of dive into that, let me introduce to you my co-host this week and every week, and that's Tony Shore. Tony, how are you today?
I'm doing great, Corey. Thanks for asking, and I've had a good week. Busy, that's for sure. There was a lot going on this past weekend. Got a chance to see the new Mission Impossible movie. Love that. Man, that was good. Have you seen that?
We just watched it this weekend as well.
Yeah, I thought it was pretty good. That train scene was intense.
Yeah, the train scene was intense.
Those movies are something else.
Yeah, it's a part. It was only a part one of a part two.
I know, that's the disappointing part. There's not enough resolve at the end. They kind of a cliffhanger. But did you see that Tom Cruise? I think this is interesting. Our listeners may have heard this. Where he drives the motorcycle off the cliff and parachutes. He did that in real life himself.
I watched a video on him being able to. He does all his stunts himself.
I know, it's crazy, isn't it?
Yeah, it is crazy. That is crazy. I saw that they actually just they're recording right now or in production for the second for the part two of that one. And I see they shut it down until they get this writer strike complete.
Oh no! So it's going to be even longer that we have to wait.
Could be, depending on when they actually resolve that issue.
Yeah, I hope they do resolve it. We're going to run out of. I like to binge watch shows at night sometimes before bed, but I rely on new content. I think we're going to have to actually shut our devices and TVs down and go outside. Maybe that'll probably be a good thing, right?
Yeah, it probably will be a good thing.
Yeah,
or maybe they're just going to have AI end up writing all this stuff.
Yeah, writing and acting, right?
Right.
Yeah. You never know nowadays. Speaking of the Mission Impossible movie, AI can do a lot, apparently.
Oh yeah, exactly. Yeah.
So, Corey, how have you been?
I've been good.
Good.
It's hard to believe we're already here in August.
Yeah.
So, we're less than 30 days away here from college football season. NFL, all that's a little over a month away. So, trying to wrap things up. Summer's not the busiest time of the year for us, but as soon as August rolls around in the last part of the third quarter and fourth quarter, we get, pretty extremely busy here. People start to focus on their, on their finances, on their retirement planning, whatever that might end up being. But it becomes a pretty busy time of the year. And last week we talked about what you should look for. Do you really need an advisor? So I think today's a pretty good topic and discuss what questions really should I be asking myself, if I'm going to invest in general, or before you put money, with an advisor, or, just anything in general, you should probably ask some standard questions.
Sure. And investing is critical. I mean, you want your money working for you. You don't want to make any mistakes that could cost you. And so that's why you work with a financial professional. But there are questions you need to ask about where your money's going, right?
Yeah. And I think one of the first things you probably should ask yourself, Tony, with the money that you're going to invest is, what is really my investment time frame, right? Am I investing something that I might need short term? And short term could be anywhere from, 0 to 5 years, 0 to 3 years. Or is it midterm, or is it more, or am I investing more for the long term, which could be, for retirement? And the reason why I say that is because when you actually can set those expectations with an advisor, then we might be able to do certain amount of different types of investments based upon those needs. And it's something that you really need to make sure that you sit down. We definitely discuss that, when we invest for our clients, because if all of a sudden you need money because you want to buy a house, maybe in the next 2 years in Florida or Arizona, or maybe wherever you're going to vacation, the advisor needs to know that, so that money's not tied up, or it's maybe not invested as risky as it really should be.
Yeah. Yeah, exactly. And risk is something that plays into this greatly, I would assume. I know you do the risk analysis and figuring out where people's own personal risk tolerance is and how much risk they're going to need to take versus how much risk they want to take. It's a balancing act, isn't it?
Yeah, I mean, it's very important. For our listeners out there, if you actually go to our website at safeharboroh.com, right at the very top, we have a risk assessment that you can actually take. You click on that. It's going to ask you 11 questions. Then based upon that, when you do come in and meet with us, we have a better understanding of what your true risk level is. It's, the one thing that we always try to do, and we do this on an annual basis with our clients, is we review your risk. One thing that you'll notice is as you kind of get closer to retirement, or as you age in general, you're going to become less risky. And you just want to make sure that your portfolio is following you, because you need to understand, if I have X amount of risk, what's that really mean to my overall portfolio? Does that type of risk mean I might lose $20,000 if the market drops, $50,000, $100,000 plus? You just need to make sure that you understand that what type of risk that you potentially have, if the market goes south. And I think a lot of people experience that here in 2022.
Yeah, that's true. Last year was a rough one. And, if you weren't properly allocated, it's tough, but it depends on your timeline. I mean, if you've got 10 years yet before retirement, 5 to 10, and you have a 2022, it's, you expect down years. It's going to happen from time to time, and you have time to make that back up. But, is your money being properly managed? Do you have all your eggs in one basket? That's not a good thing.
No, it's not. So, when we really start talking about the risk side of it, Tony, one, just like we're talking about, it could be, market volatility, right? The market is going to go up and down. What type of risk do I just have off of that? But, depending on what you invest in, are there regulatory risks associated with that? If you're maybe involved in an industry specific investment, that could actually have an impact there as well. And there's other factors that could affect your investment from a negative standpoint, but that's why it's so important to make sure we understand your risk level, and then we're going to put you in a situation where you can be diverse as you possibly can. So just because one sector of the market, goes down, doesn't mean your overall portfolio doesn't go down.
Yeah. Yeah, that's true. You kind of have to look at that. And I know people think, well, then all I need is the old 60-40 rule, 60% in stocks, 40% in bonds, and then the bonds are there for me when the stock market goes down. But that rule doesn't necessarily always work, does it?
It does not always work that way, and that's why you can also, you also need to make sure you kind of understand what that potential return on your investment could be. If the market goes up 20, should I be able to make 10%, 12%?
Sure.
20%? And I think what I see more than it, what I really see people care about, it's not so much when the market goes up 20%, I make 12 or 15. The question is if the market drops 20%, how much am I actually potentially going to be able, to have a drop or a loss, within my portfolio? You don't want to be in a situation, for example, if you're supposed to be 60% stocks, 40% bonds, the market drops 20% and you lose 20. That's not the way it really should work, from a risk standpoint, if you only want to be 60% stocks. So you need to make sure that you understand the risk, but you also need to make sure that you can understand that, that potential that potential of your investment in an up market as well as a down market.
Yeah, that's a good point. And so I know that there are a lot of things that people need to understand about their investments, and I think that's critical. But a lot of our listeners out there, Corey, are going to have questions. And how do they get a hold of you if they want to set up a consultation to talk about this?
Yeah, one of the best things to do is just give us a call at 614-760-0670, or you can just visit us online at safeharboroh.com. You can schedule a complimentary meeting with us. And here's one thing I want to make sure that you understand is, not only are we going to review how you currently are investing, but we can also then show you a roadmap on how we would actually do that for you. It's important to make sure that you understand where you are today, but it's so important to make sure you know where you're going tomorrow as well. So just give us a call at 614-760-0670 or visit our website at safeharboroh.com in order to schedule that complimentary meeting with us.
All right, and we'll be right back with more of Financially Fit Radio and our host, Corey Sickles, after this.
There are 96 different months you could file for Social Security benefits. There's over 9,000 combinations if you are married. But that's not all. There's advanced filing strategies that can also be used. By the time you factor it all in, there are over 20,000 calculations that need to be run to find the best way to file for Social Security benefits. To request your complimentary Social Security Maximization Report from Safe Harbor Retirement Group, visit safeharboroh.com. The Social Security Maximization Report will tell you exactly what to do and exactly when to do it.
Well, hello and welcome back to Financially Fit Radio. My name is Corey Sickles from Safe Harbor Retirement Group and Wealth Advisors. If you'd like more information about what you hear during our show today, just give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. And please don't hesitate to reach out to us if you have questions or if you want to set up a face-to-face or virtual meeting. Remember, all meetings are complimentary with no obligation. Well, Tony, really what we've been talking about, today is the questions you really should ask yourself before you actually take that, step of investing, especially if you're going to invest money, your retirement money with an advisor. These are all good questions that, that we've really been discussing. And, we kind of left on the last one kind of talking about, that potential return of your investment, whether on an up, if the market's up or if it's down. But I think another good question to really ask yourself is what type of liquidity do I actually have in my investment? You need to understand that. If the one thing that I would probably say, if you want to have some money set aside to potentially, buy that second home or buy a car or something where you might have access to those funds over the next 1, 2, or 3 years, you want to make sure that investment is liquid. You don't want to be able to have to pull money out. Maybe you're in a down market and you've lost 10 or 15 or 20%. So you need to make sure the advisor knows that, hey, this set of money I might need, and I might need it sooner than later, because from my standpoint, we're not going to invest that in something that's very high risk. So it's important to know what type of liquidity you have. You don't want to have all your money maybe in annuities as well. They have surrender fees. That's why it's so important to have a balance, right? You want to have investments that maybe have that short term, medium term, and long term strategies all built within that, all built within your portfolio.
Sure. And everybody's situation is different, right? I mean, that's the key to remember. You're not the same as your neighbor or your coworker or your brother-in-law. You've got a different set of issues, time horizons. So everybody's different. And I think a lot of what you're saying has to do with your time horizon, long, medium, and short, right?
Exactly right. Yeah. And that's why it's so important. When we work with a client, everyone's different. Every solution that we do is going to be different. Everyone has different risk level needs. They have different liquidity needs. They have different times of when they're going to be able to retire. So we need to understand all those type of, facts in order to make sure that we're actually putting together the right type of plan for our clients.
Yeah.
And, another thing, since we're kind of talking about the liquidity of it, right? But you really want to make sure that your overall investment strategy aligns, or you want to make sure that your overall portfolio that you have invested really aligns with your overall investment strategy, right? Just like I just talked about a second ago, you're going to want to make sure that you're diversified. One of the things that we do for a lot of our clients, especially when we're the ones that are trying to truly prepare for retirement. And this is probably something you really start looking at, probably early to mid or late 50s. And that is maybe setting aside some of your money for a fixed indexed annuity, where at some point in time, you're going to create your own pension and you're going to be able to have that guaranteed income that's going to be coming into you for as long as, you live or you and your spouse live. So it's something that's very important to make sure of. But we do try to, again, just like we always talk about, everyone's situation is different. But you do want to have a diversification where maybe you're invested in stocks and bonds and an annuity, maybe a little bit of life insurance. That the life insurance could be used, for maybe tax-free income, or maybe it's death benefit, or maybe it's long-term care. So there's a lot of different solutions that we can put together for you in order to make sure that, you're going to be diversified, from an investment standpoint.
Yeah. Yeah, I think that's important to note. And I really think that a lot of what you're getting at, too, is when people first come to you and they show you where they're at, like their 401k or their IRA or their financial statements, they bring those in, you look at them, and then they say, well, we want to be conservative, or we've got this time horizon, we're nearing retirement, but you look at it and it's not the way they're actually allocated, right?
That's good. We see that a lot.
Yeah.
Especially when we come in and we do an analysis for a potential client. One of the things we'll do is a Morningstar report to kind of show them, here's how you're invested today. Here's all your fees. This is what your true risk is. And this is way out of line based off of what you just scored on your risk assessment, and plus everything else that we discussed.
Yeah.
So we might actually have to, move things around in order to get them to where they really need to be, from a risk standpoint and from a time horizon standpoint as well.
Right.
And I kind of mentioned here a few seconds ago too, but one of the things that you truly need to understand, and I don't think a lot of people do, is you really truly need to understand what type of tax implications are my investments going to have today and long term, right? So, do you actually have all your money into a 401k or an IRA or a 403b, which means to me that, yes, it's going to grow, but you're going to have to pay taxes on that as long as that particular portfolio exists. Do you have any Roth money? Do you have any after investment accounts, right? Or do you have to pay capital gains? Or dividends? So when we sit down and go over, when we sit down with a client, we're going to make sure that they not only understand the products they're invested in, but what type of tax implications this is going to have short-term and long-term as well.
Yeah.
For them, because we talk about this all the time, Tony. Taxes are not going to go lower.
No.
Right?
No, they're definitely
if anything, they're going to go
yeah.
up, and you just need to make sure you understand where you are, and potentially is there a roadmap long term to be able to eliminate some of those taxes.
Yeah. So that's another good question people need to be asking about their investments is not only how much risk do I have, what is my time horizon, but what's my tax situation, right?
Exactly. Taxes are a big part of all this type.
Yeah.
You know, if you want to make $100,000, and when I say that, most people always tell me the net amount. They never tell me what I have to take out in order to get to my $100,000 of annual income I want, right?
Exactly. Yeah.
Right. So the question is how much of that's going to be totally tax free or less tax, or how much of it's going to be coming out of your IRA?
Yeah.
You know, if you're in a 25% tax bracket, and you want to make $100,000, we know you got to take out at least $125,000 just in order to pay the 25% tax.
Yeah.
So the whole point of it is you need to understand that. And if you don't understand that, then you need to make sure you share that with the advisor, because we're going to try to do what we can to be able to give you the best situation or solution from a tax standpoint, and not only just from an investment standpoint, but for that tax standpoint as well. Because again, it's not what it's not what you make, it's what you keep.
Yep.
And that's one of the things that we really try to do for our clients.
Yeah, I think that's huge. And that's why our listeners out there need to be working with somebody like yourself, a financial advisor, a professional who is a fiduciary who's going to look out for their best interests and look at their personal situation and say, hey, where is your money at? Is it working the best for you? Are you at risk for certain things like taxes in retirement? And do you have the proper income you need to reach your goals and to live comfortably in retirement? A lot of people think, well, I've got plenty of money, I don't need to worry about it. Well, between inflation and taxes and the stock market, there's plenty to worry about there. And there's plenty of changes that come along. You need a plan in place. You need to be working with a financial advisor, right?
That's exactly right, because I truly believe if you don't know and if you don't really truly have a financial plan, then how do you know if you're going to be in a situation later on in life where you're not going to where you run out of money?
Yeah.
I mean, that's just like you said. I mean, just because you need to make $75,000 a year of income today, 15 years from now, that needs to be about $100,000 to keep up with inflation.
Yeah.
So what a lot of people don't realize is you actually need to make more money every year. And if you don't have an account balance that can handle that, then you're going to have a tough situation later on in life where you might run out of money.
Yeah. Yeah, and nobody wants that. I mean, that's the biggest fear is running out of money in retirement, right?
That's exactly right.
Yeah.
I mean, that's everyone's biggest fear.
Yep.
And one of the most common questions that we always receive too, and this is something that you should ask, and that is what type of fees and expenses are associated with my investments, right? You should know that. Am I being charged a mutual fund or an ETF fee? Are you charging me every time you make a trade? Are there annual fees? How does that set up? If I'm investing into an annuity, what type of fees are those? So you need to make sure that you can completely understand the true cost of what you're actually investing into. Again, the best thing to do for anyone out there listening, if you want to discuss some of the things that we discussed today, or have us review your current financial plan or put one in place for you, just give us a call at 614-760-0670, or you can always visit us online at safeharboroh.com. We're here to help and guide you to make sure that you're going to have the best possible retirement that's possible. And the best way to do that is to sit down with us. Let us put together that plan for you in order to make sure that you have a successful retirement plan.
All right, and that does it for today's episode of Financially Fit Radio.
Join us again soon for another episode of Financially Fit Radio.
Thank you for listening to Financially Fit Radio. Don't pay too much for taxes or retire without a sound income plan. For more information, contact Corey Sickles at Safe Harbor Retirement Group. Call 614-760-0670 or visit their website at financiallyfitoh.com.
All matters discussed during the show are for informational purposes only. Each individual situation may vary, and the opinions expressed here may not apply to everyone. Materials presented are believed to be from reliable sources, and no representations can be made as to its accuracy. All ideas and information should be discussed in detail with one of our qualified representatives prior to implementation. We are not affiliated with or endorsed by the Social Security Administration, the Federal Medicare Program, or any other government agency. Calling this number will direct you to a licensed sales agent.